In today's episode, we speak with Ledn co-founder and chief strategy officer, Mauricio di Bartolomeo. Mauricio takes us through the company's origins and what led them to build a company that has now been operating for more than 7 years, allowing users to deposit Bitcoin and take out US dollar loans. They've built a suite of financial products around Bitcoin's hard money properties, and it's a fascinating conversation on where Mauricio sees the future of Bitcoin financial services heading and their competitive landscape. We hope you enjoy, and as a reminder, this podcast is for educational purposes only. If you enjoy the content, please remember to like, follow, or share, as this helps us greatly. Welcome to Build with Bitcoin. I'm co-host Israel Munoz, joined with co-host Lynn Bairstow. Today we welcome Mauricio di Bartolomeo, founder and chief strategy officer at Ledn. Mauricio, welcome.
Israel, hola Lynn. It was great to see you in El Salvador, and very excited to be having this chat with you guys today.
Yeah, we're excited too. I know we've talked about having you on for a while because I think that Ledn is one of the early products that has been involved with the lending space and financial services, a broader financial service package related to Bitcoin. But before we get into this, and the talk that you gave in El Salvador was so powerful. And, you know, as a former VC, I always find that a founder's story has a lot to do with how successful the business will be, how tied personally they are to the business that they're building. And so your story in particular, I think, has so much depth and meaning for why you have come to find Bitcoin as such an essential part of what the future of finance looks like. And we'd love for you to share with us a little bit more about how you came to discover Bitcoin, your background in Venezuela, and what you see being some of the core attributes of Bitcoin.
Yes, definitely. I'm always happy to share. And please pause me if I'm getting overextended, because the hard part for me is to keep it concise, because I get really into it and then I just keep on going. But as you mentioned, I am originally from Venezuela. That's where I was born and raised, and a lot of my family is still there. Venezuela, as many people know, has had problems with hyperinflation, authoritarian regimes. The country has basically been dismantled systematically by a very heavy left-leaning authoritarian military government, which is Hugo Chavez. Many people might remember him as the guy that says smells like sulfur while back in the UN. Well, he was a great speaker, and he was able to capitalize on some mistakes and some market events that occurred in the late 90s, and he took office in 2000. When he took office, it led to a series of events led to him becoming emboldened to rewrite the Constitution, which I tell people, whenever a new president gets elected and the first thing he wants to do is rewrite the Constitution, I say to people, run. Like, run as fast as you can, as far as you can. That is very much a red flag. So Chavez started systematically dismantling the country. Chavez actually died after 14 years in power. And many Venezuelans, myself included, thought that's when we were going to get our country back. And we all flew down for the election, voted in what we thought would be a fair election, ended up being a rigged election. They declared themselves the winners. And that's what triggered the first wave of real hyperinflation, the wave of the biggest migration crisis in the continental Americas is Venezuela. The people started leaving after the election. I think it's up to 8 now, million people have left. I'm one of those 8 million people out of a country of 20 something, just to put it in context. So as people are leaving, as the country's sinking into hyperinflation and there's no way out, my youngest brother, Mario, is graduating university, and he, along with a lot of his friends, doesn't want to leave the country out of principle, they want to stay there. They want to try to fix it. And my family was basically not having it. They wanted him to leave the country like I had. I was in Canada by then, and my brother was in the process of moving to Spain, my middle brother. But he also took a long time. He also didn't want to leave. I was the one that was already abroad. So my youngest brother pitches my dad on mining Bitcoin. And this is after he's pitched them several things. So in my house, we were a very entrepreneurial family. Every time one of us graduated university, my dad would he would sit us down and pitch me And if you pitch me well, I'll seed your little venture so you can go take a crack at the bat. And obviously I took my crack, struck out. My middle brother had taken his crack. He struck out. And now it was my youngest brother's turn. And he pitched and pitched and pitched. And my dad kept saying, no, trying to encourage him to leave. Eventually, my brother reaches an ultimatum or gives my dad an ultimatum and says, hey, I found this thing, this Bitcoin mining thing. I want to do this. Whether you support me or not, I'm doing this. And if you don't support me, that's fine. I'm leaving the house. And so my dad calls me up one night a little mortified. And he says, Mauri, I don't get this stuff. Can you read it? You're the finance guy, or I had been to school for finance. So I read the white paper. And what I understood from the white paper was these miners take energy as an input plus the machines. Energy was very cheap in Venezuela. And the output was Bitcoin, which could be sold globally without being impacted by Venezuela's capital controls. So you could get fair market value for the output, which wasn't the case for any other output that you were producing in Venezuela. So high level, I thought, okay, this checks out better, or at least this has a better profile than anything else he's pitched. Keep going, or, I'm okay with it. And my dad green lights him, gives him the first little money for this Bitcoin. And my brother starts mining. This was like middle of 2014, I want to say. And then by Christmas, like 7 or 8 months later, I am down in Venezuela visiting. All my friends are sad, depressed, thinking of where they're moving, where their passports allow them to work, where they can get a work permit, how much they're going to get for their house, for their car. Meanwhile, my brother is like beaming me ear to ear, just pep on his step, smiling, looking for places to rent. And he's like, come check out my mines. And I say, okay. So I go, and from our first chats earlier that year, my understanding was he was going to buy, I think it was 5 machines. And when I get to the place, I see like 10 machines. And so instantly I was like, oh my God, what happened here? I'm like, I didn't tell him anything then, but I was like, my dad gave him more money. So I go back to my dad. And I'm like, Dad, why'd you give him more money? I thought it was 5. It was a test. And he goes, no. He paid me back. Those are his. And so then I go back to my brother and I said, what are you actually doing? Like, tell me how you got these things to double. He's like, no, I'm mining Bitcoin. Let me show you. And I said, show me. He asked me for my local bank account. Venezuela at the time was Banesco. So I give him my bank account. And he goes, I'm going to show you that I'm going to sell this Bitcoin on this exchange. Back then, it was called Sir Bitcoin. And I'm going to send you the fair market value of the Bitcoin, which is worth this many dollars in the United States. And you're going to get this many bolívares for those dollars. So basically showing me that you would not be impacted by the capital controls. And you would get fair market value for the dollar equivalent amount of Bitcoin. He presses sell, transaction complete, request withdrawal, puts my bank account. The money lands within 2 hours. That's when I really understood the power of Bitcoin. And when I saw that it would do that for my family and my brother in the most hostile economic regime with the most unfair and I want to say inhuman, but against human rights restrictions, you could circumvent or bypass some arbitrary punitive rule that some tyrant had put on you, and you could get the money that you had earned, and you could protect the value of what you had made. And then I thought to myself, how many people live like Venezuela versus how many people live like in the U.S.? And I asked how many people are going to need Bitcoin in the future, and the answer was a number that I couldn't compute in my head. And so from that moment on, I became obsessed with Bitcoin and what I could do to learn more about it, to participate in this space, to participate in this growth. And because my friends or my brother was mining, the answer was, I want to mine too. I want to learn how to mine. I want to build rigs, or not rigs, but I want to set up rigs. I started building even GPU rigs because back then things like Ethereum and others were still proof of work, and you can use them to mine Bitcoin. And so I started putting together rigs. I started helping people put together mines. And then I started hearing this recurring theme from any Bitcoiners, which was whenever you got Bitcoin or found a way to generate Bitcoin, you just wanted more of it and more of it and more of it. And every time you sold it, you could never buy back the same amount. And so nobody wanted to sell it. Everybody wanted to keep it, but they still wanted to reinvest in whatever was generating them the Bitcoin. And then I started getting questions being like, do you know anywhere where we can get a loan? And I was thinking to myself, because I also did very well shorting the Bolivar with dollars. And shorting the Bolivar with dollars was just borrowing Bolivares and buying dollars with it. And to me, this concept of borrowing dollars and being able to hold Bitcoin was just a virtuous cycle, not dissimilar to what Americans do with their real estate, their mortgage, their massive short on the dollar that they call a mortgage, which is like a 20x short on the USD, backed by a house. But what's making money on that trade is the depreciation of the dollar. Your house is not doing nothing special. Sell the house, you can't buy a bigger house. You can barely buy the same thing. So it is a short on the dollar. And by allowing people to borrow dollars and keep their Bitcoin, we could do the same at a global level, because you don't have to be born in North Dakota or Florida to access a loan or a mortgage or that type of access to credit. So with Bitcoin, that's when I started getting really, really excited about the idea of lending and using Bitcoin as collateral. But the genesis of Ledn didn't come until much after, because as my family continued to mine in Venezuela, and they were doing very well, the Venezuelan regime, as it often does, anytime something does work, they go against it. And so Maduro, when he found himself in a corner because of sanctions, because of corruption, he couldn't access bond markets, he couldn't sell his oil to a lot of people, and everything he printed was just coming back to him in inflation in the millions. So he got this great idea to launch a petro. And this was his scheme to trade mirrors for gold, basically. He wanted people to give them the Bitcoin, promise some BS token that he created, and that didn't work. He also asked the miners, he created a miner registry for miners to register because he wanted their Bitcoin. And miners clearly didn't come roaring to register on his sort of nefarious list. And what he did then after is he, and I talked about this on the presentation then, which is he did a roadshow teaching his corrupt forces how to find innocent miners because they weren't coming to register. So he said, I'm just going to teach you how to go and get them. And he basically paraded ASICs around the country, showing people how much money they made, what sound they made. And so he started creating this network of snitches and basically an extortion force to go obtain the rightfully owned mining equipment that innocent miners were using to, escape the horrible situation they were in. So that's when the witch hunt began. They started going after miners who were friends, and eventually they got to our facility. They raided our facility with 2 SWAT trucks and long guns and all this stuff. Lynn, you've seen the photo. And then that's when my family had to flee the country. But my brother was able to basically use Bitcoin to make that decision because they raided his facility at 2 p.m. He ended up running or driving to escape the country in the middle of the night through the border with his hardware wallet. And it was the Bitcoin that we had mined. They took our ASICs. They weren't able to take our Bitcoin. And it was that Bitcoin that we had generated. Over those years, we had slowly transitioned all of our wealth and all of our businesses into mining, and a lot of that had turned into Bitcoin itself. So it was the fact that we had enough, not so much, but enough Bitcoin so that we can resettle and start over, that he was able to make that decision on a dime. And he used the Bitcoin that he held at the time to basically bring it with him, pay for his relocation, start a new business. And from there, my brothers went on to Spain. I stayed in Canada, and I continued mining. And then through those iterations of mining and trying to help people get financing, my business partner and I, who had a mine, we were trying to grow it. So Adam and I are the co-founders of Ledn. So when we were trying to grow our mine, we started asking for financing to grow our mine. And we were getting laughed out of the room by banks and such, being told that Bitcoin was not an asset, that who would do that? Why would you borrow against it? And by the third or so laugh, we looked at each other and said, we need to solve this problem. So that was the genesis of Ledn. We got ourselves together and we decided to start Canada's first Bitcoin-backed loan back in 2018. So that was I told you this would happen, so I'm sorry.
No, I mean, thank you for that context, Mauricio, because it's so important, and the motivation behind your company and product is is clear. It's a very powerful story. You know, it kind of reminds me a little bit of what you mentioned as far as kind of that aha moment of seeing how powerful this borderless nature is. That was in 2014, trying to launch a business for remittances, and the moment I really like Bitcoin really clicked for me was when I was in Argentina at the time, and I also saw firsthand some of the capital controls in the country, and I mean, I think sometimes we forget how many people in the world still to this day live under, you know, some sort of authoritarian regime or some sort of capital or economic controls. And I really identify with some of the points you mentioned, because for me in Argentina then, in my head, it was just like, wow, you are not going to stop this protocol. Like this this borderless digital commodity or money it's going to grow like crazy. So anyways, all that to say, you know, thanks for the backstory. Fascinating to hear how you got from the mining to the financing side. And let's maybe get right into it. You mentioned 2018 is when you started with your business partner, Adam. I know you have a host of services now, but what were the initial product offerings at Ledn in 2018?
Great question. The initial product offering was the product we wanted, and nobody gave us, right? And it was a very simple product. We just wanted to use our Bitcoin as collateral to get a dollar loan. And then we would, there would be an interest rate. And so when we would pay interest and the loan back, and then we would get our Bitcoin back. It's very simple. Now, Adam and I were first-time founders. We went to really good school in Canada, probably one of the best business schools in Canada. That's where we met. And we were really great friends. We were best friends from university. So I knew him very well, and we both complement each other in so many ways that I think has played a huge factor into Ledn's success. And but to answer your question, our first product was the solution to the problem we had, which was nobody would give us a Bitcoin back loan. The ones that were offering it at the time were some shady-looking ICOs that had these tokenomics where you had to buy the token to get the loan. And we looked at it and we said, first of all, I don't have to buy TD token or TD shares or Wells Fargo tokens or Wells Fargo shares to get a loan. Why would anyone want to do this? This is ridiculous. The other one is I'm an immigrant. Adam comes from a very highly regulated, publicly listed company. We understand regulation. And back then we saw these tokens, and to us, they were completely unnecessary, point one. Point two, they made the experience for the client terrible. Nobody wants to hold some quasi-equity speculative thing to access some financial product. And the third one is that we knew, or at least our thesis back then, was that in order to win at lending, we were going to have to it was very simple. We had to get many things right. But one of the things we had to make sure of was that we were going to be able to access the cheapest cost of capital. And the cheapest cost of capital comes from fully regulated, really large, almost hyper-regulated entities like big banks, insurance companies, etc. So if you had a hard time explaining your product to one of these counterparties or even to a regulator, your life was going to become exponentially more difficult. So we wanted to start Ledn we wanted Ledn to be the simplest, most transparent business, so that people could understand it. Because the other thing was, we needed to earn people's trust. We didn't get out of the gate with like backing from the world's biggest banks or, some big name Bitcoin developer. We were just two people that wanted to start a business and wanted to help Bitcoiners solve the problem we had, but even ourselves, frankly. And that was the first product, the Bitcoin back loan. Our first clients, not surprisingly, were other miners in Canada, were payment services. Actually, their first client, and you can look us up, was Francis Pulio out of Bull Bitcoin. Bill's really was the business that took the first loan. We basically announced that loan in a meetup in Montreal back in November 2018. And then at the beginning, our clients, the product was just one, a Bitcoin back loan. You could put your Bitcoin as collateral, you get the dollars, and then the second whenever you repay the loan, you get the Bitcoin back. And our first clients were many of them were our friends, my friends from the mining space, from meetups, from the odd conference that I'd gone to, and that I would tell them that this is a project that I was working on. They had said, oh, if this comes available, I would love to be a part of it. I don't want to sell my Bitcoin. I think it's a great idea. And so we started lending to miners and businesses in Canada. And then we quickly, one of the exciting things about this opportunity for us was that we understood Bitcoin as this borderless asset. And what we were both really excited about was the fact that if we nailed this in Canada, we could take this to the world. And we nailed it in Canada. And once that happens, we're looking around, we were very excited. But then something interesting started happening, which was all these other competitors started popping up and raising mega rounds. Celsius raised a $50 million ICO. BlockFi raised like a $20 million seed from like Galaxy and these other names. Voyager, these tokens, these companies came out of nowhere with these massive rounds, and then they started basically blanketing the market with ads and incentives and offering rates that were just way below what the market was showing, and that made it difficult for us to compete because we were in the shadow. We were the Canadian guys. We were already that no tokens, like they would call us the boring Canadians. Back then, because all these other high flyer Americans were sponsoring these big names and offering these crazy incentives, and for a while, that made it challenging for us to compete. But we never veered from our principles. We always believed that the slow and steady. We always saw ourselves as the turtle in the race, and they were the hare, and we just wanted them to make their own mistakes. No, there were no guarantees that they were going to make mistakes, but we looked at the numbers. We run a business that was very similar. And we looked at their numbers, and we looked at our numbers, and we said, that doesn't make sense. You can't carry that up, or you can't keep that up for too long. And we're just going to stay in our lane, do what we think is right. Anyway, I'm extending myself beyond the first question that you mentioned, but we can get into what happened to the industry.
Build with Bitcoin is a proud affiliate partner of River, a Bitcoin-only financial services company that I've personally been using for years. I really enjoy the strong focus they have on security and reliability, which ultimately leads to peace of mind. I know you're a big fan as well.
I am. I feel so confident referring people to River. In addition to what you mentioned, also they've got US-based phone support, which I think for somebody who's less familiar with the space or used to personal service is really helpful. In addition, they have a private client services division. So if you're looking to invest $100,000 or more, they have a special suite of services designed for you, whether you're a high net worth individual, a family office, or a trust. I also really appreciate the continued improvements they make in the back end so that reliability and security continues to be really apparent.
They additionally also have US dollar cash deposits paid out in Bitcoin. They have a yield product for that, which is an interesting alternative way of accumulating Bitcoin. Overall, fantastic suite of services. If you're interested in onboarding or opening up an account at River, use partner.river.com/buildwithbitcoin for personalized onboarding.
Yeah, I mean, and I think we know that the lending industry did implode because those numbers are not realistic, but you were able to survive. I mean, I think that just in a founder's story, when you hit something where all of a sudden you have a lot of competition, you either tend to pivot or expand your offerings or leave that business if you feel that you can't compete. But you made the decision to continue on, and it didn't take long for that to implode, which is, sad for the overall industry, but I think good for how your competitiveness. But you also expanded what you offer. I mean, really, Ledn is a true financial services company today. And
Yes.
And I would love for you to get into a little bit more of the path that you and Adam took about when you decided to roll out. Like, you have interest-bearing accounts, you have private wealth services, you offer services for corporations. So you've really gone beyond that initial lending to buy a Bitcoin miner into these more full-service aspects. So what was that journey like?
Yes, very happy to speak about that because it was it's very much a journey, like you mentioned. And the way the sequence of events was, we went to market with a Bitcoin-backed clone. So that was our only product, 50% Bitcoin-backed loan. Really, that's the only thing we offered at the time. Then we start noticing a few things. Number one, after we launched the loan, there starts to be, the emergence and growth of stablecoins, I would argue, was the first thing that we weren't planning for when we launched Ledn. And the stablecoins come up. And we start getting demand from clients, particularly in Latin America, to get their loans dispersed in stablecoins because they don't trust their local banking systems. This is something I know all too well. So we were one of the first ones to start adding stablecoins for loan disbursements, in addition to cash. So that was like step number one, is we incorporate stablecoins as the disbursement rails, because our clients saw a use for it. So that was, and this is a building block that leads into future products, but I'll start with that one because that one was the sort of first thing that we did to the product. Then we start following very closely, and I speak to back then and still today, not all of them because it's impossible now because of the volumes. Back then I used to have deep conversations and I knew every one of our clients like the back of my hand. And we watched furiously what they did on the platform. To understand what they liked, what they didn't like. We had these heat maps, I remember, of where their cursor would spend time, and we would spend time analyzing heat maps, and so we were really curious to see what they were using these loans for and what we could do better. So we noticed that about 40% of our clients in that first year were taking out a loan for say $10,000, and then they would come back and take out a $5,000 loan, and then they would come back and take out a $2,500 loan. And then they would come back and take a $1,250 loan, and so on and so forth until they reached the minimum loan amount, which means they couldn't take any loans any further. So we start seeing clients do this. First it's like 5%, then it's 10%, then it's 30% of our clients, then it's 40% of our clients. And so then at this point, I'm speaking to all of them, and we ask them, what are you doing with this? It's like, no, I'm using the loan to buy more Bitcoin. Then I'm coming back to you to get another loan, taking the money to buy more Bitcoin, and so on and so forth. So I'm using your loans to buy more Bitcoin. And I start asking a bunch of the clients, and 40% of the people were using these loans to buy more Bitcoin. So what did we do? We productize a loan to buy more Bitcoin so that they didn't have to do these 20 and 30 loans. They just do 3 clicks and we'll do the work for them. And for us, the underwriting was identical because the first product was you bring $100,000 worth of Bitcoin, we lend you $50,000. So we are out 50, hold 100. With B2X, which is the product we created as a result of this behavior, a client would bring 1 Bitcoin, which was $100,000. We would lend them an extra 100 to buy the second Bitcoin, and we would keep the additional Bitcoin and the original Bitcoin as collateral. So the underwriting for us was identical. We're out 100, we hold 200. So all we did was just productize the process of purchasing the additional Bitcoin and making that easier and more available for them. And that product flew off the shelves. That was our banner product because we put that in the market. I think that product was in the market. I'm trying to remember when we launched B2X. B2X must have launched somewhere in the middle of 2019. Remember 2018? Yeah, somewhere in middle 2019 we launched B2X, and B2X just starts. Like, people love this product. It got crazy uptake. Then, because our book started growing so fast, we found ourselves having to get more dollars to fund these loans. And so we had to look for alternatives or partners that would fund these loans because our original angels, their pockets were only so deep. And we were needing more and more money to fund the loans. And we start getting requests from clients that say, hey, I have some extra stable coins. I'd love to earn some interest on these stable coins. And it seems like you guys put stable coins to work for a living. Like, would you guys consider paying me an interest on these stable coins? And we were like, we huddled and we were, okay, well, can we make this work in a regulatory compliant way so that we can put out these accounts because it'll help us get the funding we need for the loans. And that's when we launched the USDC growth account, what's called the growth account today, which would allow people to deposit US dollar stablecoins to earn an interest rate. And then the way we would generate that interest rate is by using those stablecoins and funding our loans. And so that was product 3, right? Or I guess iteration number 3. From then, we had clients that had taken out the loans, done incredibly well. With B2X, they had managed to get a lot more Bitcoin than they originally had. And so they would reach their investment goals for the loan itself, close the loan, but now they're sitting on this extra Bitcoin. And so they would come to us and say, hey, I see you guys are paying yield on the dollars. Do you guys pay yield on the Bitcoin too? And we said, well, not today, but let us take this away and we can come back to you if there's any appetite. Then on the other side, we were going out to a lot of institutions to borrow extra dollars, the dollars we needed for the loan book. And a lot of these guys, which were great firms with great balance sheets, were coming back to us and saying, hey, you guys hold all this Bitcoin collateral and we need a bunch of working capital in Bitcoin to do a couple of transactions. Would you guys lend any of that Bitcoin? And at the time we were like, well, no, but we have other clients that are interested in lending us Bitcoin for purposes of lending it out to you. So let us go back to them. And so we do a few pilots, and then we said, okay, there's something here. So we built our product, an additional product, which was the Bitcoin growth account. And so now people have the ability to borrow from the Bitcoin, earn interest on their Bitcoin, earn interest on their dollars. And from then the natural request was, I want to be able to trade between Bitcoin and dollars. I want to be able to move between these two. So we launched a trade feature that allows people to basically move between the two things. And I think early 2021 is when we raised our first VC round. And at this point, we're hockey sticking. We're growing. We're growing like crazy. We're dealing with a bunch of high net worth clients and Bitcoiners, and they start asking us for more structured products. So structured products, but I guess some products that are akin to covered calls, covered puts, right? Like, so I wanna be able to lock my position at this price, but I want to get yield on the way. And so basically I'm a happy seller of Bitcoin at 30% higher than it is today. So I want to be able to enter into a contract that allows me to earn yield. And if Bitcoin is higher than that price at the end of my contract, I'll give away the Bitcoin and keep the cash. If it's not, I'll just get the interest. So that's what we call the dual cryptocurrency note, which is very much a structured product, another way of earning yield and potentially putting on a transaction that you want to do, because that's the way the product is designed. And so that's DCNs. And that was, I'll pause there because I think that rounds out a lot of the suite. But
well, and I have a question. I just want to pull out something you said. So you started in 2018 and you raised your first venture funding in 2020. So you went 2 years just on your own growth, which is very unusual for a high growth startup. So usually it happens that you take VC funding and that funds your growth, but you're using this to really scale. Was this kind of going back to being a Bitcoin focused company? Did you attempt to raise venture funding earlier on, or did you have any challenges with trying to get funding from more traditional venture investors because of the market focus or the technology that you were focused on? I'd love to hear a little bit more about that because it is a little atypical from tech startups.
Yeah, and I would say we are an atypical tech startup. So our first investors were angels; they were not venture funds, and we raised very little money compared to our competitors back then. If you look, that round is public, I think. So we raised 1.5 million. Only $500,000 of that was equity. The other $1 million was capital to lend on the loans. So we had to build this thing with our fingernails for the first 2 years. And yes, we tried to raise money from VCs. And the challenges that we had at the time was that the VCs that got the space wanted tokens. They wanted the ICO, the high flyers. That when are you going to list? When are we going to dump on retail? How do I get out of it? I want to get out of it right away. I want to get out of it tomorrow. I want to buy your token. I want to put a few tweets and I want to dump on everyone. And we didn't want to. That was the last thing we wanted to do. So we said, no, we're not going to do a token. We have no desires or no plans to do a token. We are going on a more traditional path. If you back us, great. If you know, no. We got too many of these hot flying tokens that we're just getting in and out of. So you guys are just not, it's just not a fit. There's not a fit. Then we went to the more traditional guys, and the more traditional guys didn't get Bitcoin. And they didn't understand what we were doing. They didn't see the potential. They would always have some dismissive comment about our volumes. They would, I remember distinctly hearing from many, come back to us when you do 5 million, come back to us when you do 5 million. This is total. Since inception, this was back then. It was a slow build for that book. Today, we get $5 million loans, just one. So it's funny. But back then they were saying, nah, I don't really get it. Come back to us when you hit this. Come back to us when you hit that. And it was very challenging. It was very challenging because we also had the additional context that we had these other perceived bigger competitors that were doing the same in the likes of BlockFi and Celsius and Voyager and these other firms that were just raising like crazy. They knew how to raise very well. They weren't lenders. They weren't Bitcoiners. They were Wall Street guys. And they had a marketing machine and a fundraising machine. And investors ran to that like a light, in the same way they ran to FTX. That's what FTX had, a fundraising machine and a marketing machine. And that's very great if you're looking to maximize token value, but it's not very great if you want to build a long-term business with sustainable foundations. And it was very hard for us because I remember back then, all these, the way these companies were growing, they were also adding tokens, they were adding services, they were adding things that, were, basic attention token. Remember that? Or remember, the compound token, or the this token, or the this yield bearing token, or that yield bearing token. We were Bitcoiners. We didn't want none of that. We knew how that movie would end. And so we said no to that. And it was hard because, you have these guys that are moving fast and breaking things, and their numbers seem to be doing this. Here on this corner are these Canadians that are just like slowly chipping away and building something that may take 5 years, may take 10 years. I don't have time for that, right? Like in the VC world. And I think the breakthrough for us, ironically, and I'll say this in the kindest way for all founders, the breakthrough for us to finally get into the VC wheel of raising funds was getting to the point where we didn't need the money. That was exactly what triggered everything. Because I go back to my dad. My dad's a very smart guy, and he's a serial entrepreneur. And distinctly, I remember the best time to go to a bank or any financing partner is when you don't need the money. The worst part, or the worst time to go to anyone to ask for money is when you need the money. So as a founder, what I'll say is that this idea that you're just going to parade around a deck and you're going to get thrown millions of dollars so that you can go build your vision. That might work if your last name is Zuckerberg, or Bezos, or if you are magna cum laude at Harvard Computer Science or MIT. Like if that's you, go raise a deck and go do it. For the rest of us mortals, it's proof of work. Like you have to show product market fit. You have to show that other ones or someone out there finds value in what you're building, and they are paying you a fair price for it. One of the things I love about Ledn is that Ledn, all of our products are organic and sustainable. We don't subsidize rates on any of our stuff. Everything makes money by default because, Lynn, in Israel, it comes from a culture where we had no room for error. We built this thing. We had no room to mess up. We had no room for the liquidation engine not to work. We had no room to pay somebody more than the product allowed for. We never had that. And I thank God for that, because it created a culture internally of building things that make sense, not because they are going to get you this many views or this many impressions and, oh, no, that's going to make it work. No, like the product has to work. Don't fall into this illusion that like the rubber hits the road. And if like you do things that are sustainable, that you could run, that could press go and let that into the wild for years. If you're building something that you know has a quirk and you know has a flaw, that flaw will get exploited.
And you know, speaking to strong foundations and culture, Mauricio, and anytime you're dealing with debt and leverage, that can be, you know, it can be a risky business. So you've been, you know, to our previous points in this conversation, one of the few that has been able to survive during some of these other meltdowns. And I know a lot of it is because what you're mentioning, that you've stuck true to your principles, of which I'm sure, you know, a couple of them are maybe, you know, transparency, only working with trusted partners. Of course, these products have risks, but can you expand on some of those core principles that have allowed you to stay in that growth, you know, in that growth stage throughout these past, you know, 7 years now?
Yeah, great question. So, like I mentioned, we had to earn people's trust. And the beautiful thing about building a business in the Bitcoin space is that Bitcoiners are forged through fire, not to trust. And it's earning the trust of a group that is so smart, that is so skeptical, and that is so diligent has been a beautiful process, because it was very hard at the beginning. And the way you earn trust is by saying you're going to do something and doing something. And then saying you're going to do the next thing, and then you do the next thing. And you do it in the timeline that you promised, and you execute just like you said you would. You are that person, and that starts building this idea of reliability and trust, and basically makes you feel like, okay, those guys got my back. Those guys are legit. They know whatever you read something, it checks out with what you said. Whenever, you know, this action has been checks out with everything. Like everything just maps to what you said you would do. And with Bitcoiners, we understood very early on that we had to earn people's trust, and the way we would earn people's trust is we asked them not to trust. Like Bitcoiners says, don't trust, verify. We wanted to make everything we were doing verifiable by our clients. So if I told you that your Bitcoin is on chain and it's at BitGo, you can see your Bitcoin on chain. You can call up BitGo and ask them and say, yes, Ledn is a client. Yes, that's, you know, these addresses belong to them. Yes, like you're okay. We gave people the option to verify. I had clients call us and tell us, are you guys real? Are you a real company? We said, yes, we're right here. This is our office in Toronto. Come meet me for a coffee. We had clients at the beginning come make sure we were real. And that was really funny. At conferences, same thing. And people would grill us at conferences. How many loans have you done? How many assets under management do you have? And this was like, you know, 2 months out. And we're sitting there just answering the questions honestly. And it was a slow build, but our job was to basically earn people's trust by doing the right thing. And so at the beginning, we knew transparency was going to be a huge thing, right? So being able to check where your collateral was on chain, that was one of the most important things for us in the beginning. And as the business evolved and grew, and we kept adding more products, and we had to find new and creative ways to continue adding that transparency as more products came into the fold. And we then we added this thing called proof of reserves back in 2021, and it's done with a certified public accountant in the U.S. We were the ones that built this system and this process with them, this idea of proof of reserves attestations with a CPA. And we designed it together, and we designed it to include both our assets and our client liabilities. So it's a proof of reserves report that is verifiable by you, the client. You can see that I reported to the accountant the exact balance to the penny and to the Satoshi. And you can download this information anonymized from the accountant's website. So you will know from them what the value we showed them was, and therefore you can make sure that we are honest about our liabilities. And if you're honest about your liabilities, your asset base has to match and surpass that. And we were doing this back in 2021 when, if you remember, we had DeFi summer, and basically everything in DeFi was flying, and there were these yield tokens, and the smart contract lending platforms were exploding because they were basically paying people to borrow, which was insane. But they were growing, and people kept telling us, oh, well, what's going to be your play on DeFi? Are you going to add this token? Let's launch a Ledn yield-bearing token. And we said, guys, no. We're doing proof of reserves. And that's where we're spending our time and money right now, because if we wait longer, nothing else that we build will be compatible. One of the things that Ledn was that the transparency and proof of reserves has to be at the foundation of the business, so that everything you layer on top is just glass, transparent, like the foundation. Today, even after the collapse of 2022, people are still begging exchanges for proof of reserves attestations. You think they're not putting them out because they don't want to? They can't. Imagine having 3,000 tokens and 200 products and trying to figure out at a point in time where every single asset is, after you've already built them and stacked them on rubber and band-aids and put different tech stacks together to basically move fast because you had to. You cannot retroactively do proof of reserves. And you certainly won't be able to do them as fast as we do, which we pump them out every 6 months, because we built a system that's designed to be transparent. We didn't decide later on that it was a good idea to be transparent because our clients thought it was cool. It was laid there on the foundation from the beginning. So trust, transparency. We are a people business. One of the decisions we made very early on was to put our faces on the website. If you look back at those websites back in the day, if you go to way back time machine and you look back at the Celsius website or the BlockFi website, they were all these protocol chain block thingies moving and like all fancy flash, and we don't talk to anybody. The future is digital. And we thought about that and we saw that. I'm like, oh man, that looks horrible. Like I want a person. Like I want this to feel more like a real bank, like something that someone I can actually reach out to and speak to. And so we put people everywhere on our website, and we wanted to let people know that they could reach out to us, that we did have a customer service team. And that was a big thing for us and how we connected with our clients. And I think that for me, transparency, accountability, having stringent risk management. So another example is, I can go on forever, but we only supported Bitcoin and stablecoins, as I mentioned. As all these other tokens were getting launched, these other firms were adding them on support for them because they wanted to get the new community to come in and move their assets. And so they start offering paying yield on things like basic attention token, Dogecoin. And we were dealing with these desks. And
Build with Bitcoin is proud to be a partner and supporter of the upcoming BitBlock Boom Bitcoin conference taking place in Dallas, Texas between April 3rd to the 6th. Celebrating its 8th edition makes it the world's oldest continuous Bitcoin conference. This year's speakers include Parker Lewis, James Lavish, Marty Bent, Larry Lepard, and Bob Burnett, among many others, including your Build with Bitcoin team. Join us in getting together with other like-minded Bitcoiners. When you use the code BUILDBTC, you get 10% off of your tickets. Visit bitblockboom.com for complete information and to register. We'll see you soon in Dallas, Texas for the true Bitcoin conference, BitBlock Boom.
Back then, you would turn around and try to lend $10 million of Dogecoin to an institution, and they were going to be like, get lost. I don't want none of this Dogecoin thing. What's basic attention token? I don't even know what this thing is. I don't want it. And so what they did is they had to turn that into things they did want. So they would convert that Doge into stablecoin. So they would convert that basic attention token into Bitcoin to lend them. But then they had a mismatch between the two assets. A lot of times because we were in a zero interest rate environment, so people were getting massive deposits because there was nowhere else to get yield. So Celsius, BlockFi, all these guys were paying 6-8% and just ballooning their assets. And they needed to deploy them because they were bleeding out this cash. They weren't getting 6-8% nowhere. So they get this great idea, which is we're going to finance mining operations. And as a former miner, I instantly saw that as a huge mistake. I knew I knew that they were going to end up paying for this, because it doesn't matter how you slice it. When you take open term deposits and you fund either hardware or the operation itself, you have a massive maturity mismatch. These people are going to show up before the 5-year payback is here, and you're not going to have a way to give them back their money. And that's exactly what happened. BlockFi started lending against hardware. Celsius actually went on and started their own operation with people's open term deposits. And I felt like we were like screaming at the sky at this time, because the market was even celebrating them as they said these things, like, oh my God, that's so brilliant, another vertical, what can't you do? And we were sitting there thinking to ourselves, do they know how this thing works? Like, have they done this before? And clearly they hadn't. And so there was just a lot. And the other thing is strict underwriting. I mean, for crying out loud, this one still shocks me. Three Arrows borrowed from every lender at scale, except for Ledn. They never got a dime from us. But you want to know what the crazy part was? They didn't show anyone financial statements. Anyone. All these other guys were dropping people's money on Three Arrows without ever asking them for a financial statement. We asked them for a financial statement. They came to our desk 3 times, asking us to borrow. We said, we are not going to lend to you if you don't give us a financial statement. Here's a letter from Kyle. Thanks, but no thanks. And they would say things like, oh, you're going to regret this. You're the only lender that's not lending to us, so-and-so. We didn't care. But these are the types of things that people were doing in these fast and loose times. So I will say, as a potential venture person listening to this, or as a potential founder, there will be times where even people that you consider to be very smart are going to be suggesting things that sound very wrong. Stick to your guts. Do not chase the shiny thing. Especially if it's because someone else told you to go chase that shiny thing. Do not chase shiny objects. It's a sure path for failure or mistakes.
Mauricio, I just want to touch into the speaking about regulation or lack of regulatory clarity, or this and that. It's like somehow you have been able to offer your products and services now in 130 countries, which is really remarkable. So you started in Canada, but now you're global. And obviously that must tie into your background and wanting to serve markets that you personally understand are the ones that need it the most in terms of the stablecoins and all. How did you consider or approach that from a regulatory standpoint? How are you able to operate in this many jurisdictions?
It's a great question. So what I'll say is that I guess just as a high level, at Ledn, like I mentioned, we have a series or a plethora of products. And even though we say, 120, 130, not every product is available in every country, right? And that is an important distinction, because there are nuances between what a regulator, how someone regulates a particular product in one country versus how a different country regulates a particular product. There's even differences at the state level or province level in countries like the US and Canada. So if you go onto our website, you'll see that our loans, in the United States, for example, our B2X product is not available. Our growth accounts are not available. Our DCNs are not available, but our Bitcoin-backed loans are available in most states. Same goes for Canada, right? And similar things in different parts of Europe, right? Some products are available, other products are not. We just announced our VASP, regulated VASP entity in Europe, and that's going to be that one we're really excited about. And we have a regulated VASP as well here in the Caymans. And you're going to be hearing more and more regulatory announcements down the line. I think one of the biggest things that we're proud of here at Ledn is that we have a perfect track record with regulators worldwide. And I think other firms will be hard-pressed to say that, because we've always operated from a starting point of caution and just respect for regulation, because we understand that we need to be a compliant firm in order to grow and interact with the firms that we want to interact with. So the interesting evolution of that was also somewhat impacted by our competitive dynamics. So when we launched the product in 2018, we launched it in Canada. And as I mentioned, shortly after, we started hearing from these behemoths that were all fighting for the U.S. market. So if you think back to BlockFi, Celsius, Voyager, Genesis, a bunch of others, they were all it was a dogfight for the U.S. And they had raised massive war chests to market in the U.S. So we decided, well, why would we go pick a fight with Goliath when there's such a blue ocean of people that need this product? None of these guys even offer this thing in Spanish. Why don't you start there? So we said, we're going to be the first ones to offer this thing in Spanish because it made sense. So we brought in a firm, a global law firm that had offices in we wanted to evaluate 6 countries at the start. I think it was Mexico, Panama, Venezuela, Colombia, Argentina. I think I'm trying to remember the 6th one. But anyway, we do this legal review for our loans with these with this firm. And so we determined that, these are the things we have to do to the loans. This is how you can offer them. These are the thresholds. These are the considerations for these particular countries. These are the things you have to disclose. So basically, we start tailoring our offering to be compatible with these other markets. And we decided strategically not to compete in the U.S. because it was going to be crazy expensive, and there were 6 other dudes trying to do the same thing. And we understood the Latin market much better than they did. And so we decided to open up the first 6 countries in LATAM. I still remember I went out to the Blockchain Summit LATAM in July of 2019, and I did that keynote. Thank you, Cristobal, for giving us that keynote, by the way. He was the first ever conference that even accepted us to speak. And not only that, he gave us a keynote. And I still remember that today. And we announced that our product is available in Latin America at the Blockchain Latin Summit in Mexico City. It was epic. People there were so grateful. And in Spanish. And everything in Spanish, not just the website, like customer support, legal agreement, the whole 9 yards. And people were so grateful. And the funny thing is, when people heard us talk and when people understood what we were trying to do, we used to get a lot of love from the real Bitcoiners, from the other guys that people were talking and considered boring or conservative or this or that, or you're just antiquated. No, let's do the token. A lot of the guys that had this sort of calm, long-term view and didn't get carried away with the noise and the shiny things, they respected what we were trying to do tremendously, and they supported us. They ended up becoming some of our biggest clients and supporters. So the move to sort of bypass the U.S. in the early days was by design. And then, because we started doing everything in Spanish, then we decided to open up Brazil. So we had to go do the whole stack in Portuguese. And so we did the whole thing again for Brazil. And funny enough, we start getting, because we do the things in Spanish and in Portuguese, 2 things started happening. One, we started getting a massive client base from the southern U.S. states that all spoke Spanish. And then that starts picking up. Then we start seeing a pocket of that later becomes a very substantial pocket of growth coming out of Spain. Because believe it or not, people that live in Spain don't love reading things in English. And they felt really comfortable with our product. And we were doing educational material in Spanish, so they start taking our product. Then we start getting people, because we have everything in Portuguese, then we start seeing clients pop up in Portugal. And then those guys start telling their friends in other parts of Europe, and Europe starts picking up. And so all of a sudden, we're sitting there, and now we have LATAM, Canada, pockets in Europe, and then we start getting a bunch of the Americans that are getting very jaded by these games that these high flyer guys are playing. And so now we become this antithesis to these dodgy giants. And so the Bitcoiners, just almost out of straight values and just out of common sense, really, because they see a lot more risk where others perceive, glamour and glitz and glamour with the big names and the crazy rates. Others are actually having the view that we have, which is, how's that sustainable? That sounds insane. I do not want these types of people managing my assets. I want those boring guys taking care of my Bitcoin. Like I feel a lot better sleeping when it's those guys. And let's do that. And let's tell people about it. And so and we're just this, and then for those guys, for the BlockFi's and the Celsius, we're just this little kid that just won't go away. Like they keep trying to wish us away, and whenever we announce something, they keep dropping the rates. They keep trying to squeeze us and just fly us down, but we just won't go away. And I think this created a bunch of frustration in their camp. So then that happened, and then once some of the bigger name North American Bitcoiners started backing us, then we all of a sudden were in the mix in some of the biggest U.S. markets. And then eventually, as we all know now, there was this big cataclysmic event, the sort of asteroid that killed the dinosaurs type of event, and then it wipes out all these dodgy giants, all these dinosaurs that were doing reckless things. And then that just left the market just wide open for us. And today the U.S. has become basically our biggest market, or today it is in many ways our fastest growing market and our biggest market. And I don't think that's going to change for the foreseeable future. So that was that evolution on the markets.
I love the story, Mauricio, and there's just so many lessons in there. And you've taken us all the way to the present. Looking forward, I mean, before the call, we were speaking a little to your very positive growth metrics in the recent months. You have some regulatory changes as well here in the U.S., which of course, tends to be a leader in lots of these regulatory issues. It's very likely that banks and bigger players will start to get more involved on the custody and other services side. With the growth you're seeing right now that we were getting into, and maybe you can share a little bit of, how shocking some of these recent growth metrics are. And going forward, how do you look at Ledn and the competitive landscape?
Yeah, it's a great question, Israel. So maybe to speak a bit about the numbers and to put some of the numbers in context. So at Ledn, we have done, including retail and institutional loans, since inception, we're at over $9 billion of loans processed. But to give you a sense of how that's picking up, 2.4 of those 9 billion happened in 2024. And in January, and only in January, we did $114 million of retail Bitcoin-backed loans. These are people taking Bitcoin or dollar loans backed by Bitcoin. This doesn't include any of our institutional figures. And that is a record for us by a long shot. Compared to January last year, this is like a 5x in terms of our volumes. And the company today is growing faster than it ever has. We are more efficient than we ever have been, thanks to AI, believe it or not. We are a much smaller team today than we were back in 2021, and we process more volume, more clients. And we are a lean, mean lending machine. And when I think about the competition, as I look around and I look ahead, I've been personally writing about this idea that every time this Bitcoin rallies, our model gets validated. And every time that happens, people get dollar signs in their eyes. And keep in mind, we've been doing this for 8 years. If you're coming into the market today, of all the 8 years you've had, if you're coming into the market today, you're an opportunist. Like, you could have been building this thing 8 years ago. There's been no shortage of time. If you're saying today, now, if you're a bank that's considering launching this today because your regulation allows it, I'll grant them that. But there's going to be a bunch of these, Bitcoin companies, new entrants to the space that all they see is the dollar signs. Look how great Ledn is doing. We're going to go do that. And we were here when Celsius tried that. We were here when FTX tried that, or when BlockFi tried that. Voyager tried that. Genesis tried that. We're no strangers to competing against massive companies at times with uneven playing fields. And so we've always seen the outcomes as if this thing works, everyone's going to want a piece of it. Like Ledn is not going to be the only lender. We know that. It's just like Bank of America and Wells Fargo are the only mortgage lenders. You want to have diversification. We want there to be great players in the space. that we can point at and say, yeah, we're doing great. Look at how many great people are doing this business. So I think the banks aren't coming. The banks are here. And that's what I keep telling people. Our biggest funding partners for these loans are banks today. So you can look at the deal we have that we did last year, and the other ones we are working with, but they're under NDA. So I would say that banks are here. Banks are going to want a piece of this. How they compete and how they enter the space will vary. Some of them might want to be the back end to something like Ledn. Some of them might want to integrate a service like Ledn into their stack. Some of them might look to buy something like Ledn to roll it into their stack, right? It really depends on how the whole thing plays out. For us, and I'll say this to other founders, don't build a product or a company thinking about an exit. That's not the right way to do it. Because if you optimize for the exit, you're not optimizing for your clients. And, for us, we've always optimized for a client. Like how much your next round gets valued at, who knows, right? Like how quickly can you get to the market? When does the IPO window open so that you can go take the book? Who knows? But what you can guarantee is that if you have a great business and a great product, whenever that window opens, someone's going to knock on your door. Whenever someone's looking to deploy capital, they're going to look at you because you have a great business that people love, that's sustainable, that has great metrics. That the money will find you. Whenever the market heats up, the money will find you. So just focus on building a great business and building for your clients. And if you do that, you're going to be just fine.
Greatly appreciate the insights there, Mauricio. And I think we're in for a very active few years in this space that you operate in. Being conscious of time. Any final words of advice or comments for anyone listening? I'll leave it vague.
For any potential founders listening, do something you love. Do something you really, really, really enjoy doing, because that's what's going to carry you through the hard days. And do something that you really believe in. Don't do it for the money. I mean, yes, there has to be a monetary incentive to it. But if you don't really believe in what you're doing, you're going to wear down and you're going to wear out really fast. The reason I still have this energy and you still talk to anyone at Ledn and I'm just as passionate today as I was when I started this thing is because I really love what I do. And I love it today when the market's at 100, and I loved it when it was at 16K and people were nervous around FTX. You have to really believe in the future of this thing, because that's what's going to get you through the days that there will be dark days. 100% there will be dark days. But if you have this conviction, that's what's going to get you through it. If you don't, you're going to get shaken out on the bad days. That's not the outcome anybody wants. So, just wait until the window to open up. Wait until the opportunity to open up. I went to school. I prepared myself my entire life not knowing Bitcoin would exist. Bitcoin came to my life after I'd done my school, after I thought I knew what finance was, after I thought I had a life plan. And my life plan ended up changing completely because of it. So just wait for the right opportunity. And when you find it, that is the other part of the advice. When you find something you love, when you find something you believe in, swing hard. Just swing as hard as you can. And then let time do its thing.
That's a great note to end it on. And thank you so much for sharing that advice with the entrepreneurs that are our listeners too. And Mauricio, we really appreciate your time and sharing your story. We look forward to having you back as this grows, because I think, as Israel also commented, this, I think we're in the era of financialization. And as Bitcoin appreciates in value, people are going to want to understand more what they hold and not want to sell it, be able to use some of the appreciation on it. So your products and services, I see the growth rate that you're experiencing is only going to increase and continue on as Bitcoin's price continues to appreciate. So we appreciate it. If any last comments or any speaking engagements that you have coming up, Mauricio, and we'll add all of this in the show notes.
Yes, I'm going to be at the Bitcoin MIT Bitcoin Expo in April, and I'm going to be at New York for the Digital Assets Summit. So both of which, and there's going to be more of our team in New York. I'm only be the only one speaking in the Bitcoin Expo at MIT. But anyone listening, if you're around, send me a DM. My DMs are open. Would love to see you either one.
We'll include it in the show notes. And thanks again for the time, Mauricio. It was a great conversation.
My pleasure.
Thanks for listening to the Build with Bitcoin podcast. If you found benefit in what you heard in this episode, we'd truly appreciate it if you would like, share, or leave a comment on whichever platform you're listening, as this helps others find us, which is especially important for a new podcast. And as a reminder, our content is intended for educational and entertainment purposes only and is not to be considered investment advice or a recommendation to invest in any company or asset mentioned in the podcast. Build with Bitcoin is a proud affiliate partner of River, a full-service, 100% reserve custody, Bitcoin-only financial services company. For your next Bitcoin purchase, use our exclusive link, partner.river.com/buildwithbitcoin. Thank you sincerely for being a part of the Build with Bitcoin community.